Hello, everybody. So a recurring question from people is, oh, why don't you publish your portfolio? You should tell us your portfolio. And of course, this channel is still, as of today, still a hobby for me, and it's going to be a hobby for a very long time. But, you know, it's publishing your portfolio. That's something you would do if you're giving things like advice or whatever. This is not what I do. This is no financial advice, no investment advice on this channel. I'm literally just talking about my stocks because I am pretty obsessed with my stocks, and I think most people who buy individual stocks are pretty fond of their stocks and they love talking about it. You know, some people are car people, they talk about their cars. Other people are stocks people, they talk about their stocks. So that is what I do. That's the reason for this channel. Plus updating everything. Frankly, I try to keep my 2FA, two-factor authentication, and you know, my password changes. I try to keep that under 5 a day. And you know, when you've been in the U.S. for a while, like me, I've been in the U.S. almost 16 years now. Like every time you switch a job, you know, it's a different retirement account, a different company. Sometimes you roll it over, sometimes you can't really roll it over. There's all sorts of things, you know, but make it so it's annoying to update it. So what I do is if I have a retirement account, I buy QQQ and I forget about it. If QQQ is available, and typically it's going to be in the form of a mutual fund that tracks the Nasdaq or that tracks like high growth stocks. And so I have a lot of exposure to QQQ, which is why on this channel I'll be compelled to cover stocks like Apple sometimes because it's the leading position in the QQQ. But anyways, I'm going to tell you about the main positions that I have, and I'm going to organize it into Roth buckets, like big buckets, knowing that it's a conviction weighting. A portfolio is based on your conviction and how big your conviction is. That's part of being a good investor, right? And also it's based on your age. I am 36. You know, I'm not 22. I can't go all in on HIMS. I love HIMS. I'll show you about HIMS later. So it in one of my later buckets, it's the biggest position in that bucket, but I can't go all in on HIMS because, you know, I'm closing in on halfway from my career. So you know, it depends. It depends on your age. It depends on your conviction. Me, I go very big on my biggest positions. That's how I've always done it, and I think it works really well to do it like that. And like a lot of people, I think today who see disruption, who are open, who are marked with great openness towards technology, they see Tesla and they see Bitcoin, crypto in general. Some people are very big on things like Solana right now. A few years ago, it was the NFTs. Anyways, depending on the crypto side, some people are really big on crypto. Some people are really big in disruption stocks, right? Tesla, it seems like Palantir is taking a little bit the shape of a new Tesla. Also, if you will, I own a little bit of Palantir. I'll talk about that in a second. To me, my buckets where I'm putting the most of my conviction is Tesla and Bitcoin. And some people who own Bitcoin will tell you, well, it's foolish to own anything else but Bitcoin. And in fact, some people who own Tesla will tell you, well, it's foolish to own anything else but Tesla. And it all depends on your analysis. I both find them extremely compelling, both. And you know, in my view, I find them to have very low risk both. And the lowest risk out of all of the assets this is gonna sound crazy, but out of all of the assets that I have, to me, the lowest risk is Bitcoin. To me, it is the lowest risk, you know, and this is a conviction that I've built on Bitcoin since 2015. It pains me. And I'm not even going to repeat it on the channel, how much I sold all of my Bitcoin at the end of 2015 because people who were more learned than me thought that Bitcoin was going to zero. And so I missed so much of the gains of Bitcoin. I got back into Bitcoin heavy in 2018. But this has been following my investing journey since 2015. And so, you know, it's kind of like, you know, it's important to learn and document this stuff. So that's why this channel is also for me. It's going to help me become a better investor because NVIDIA, I thought I was real smart when I sold NVIDIA, right? I should have held NVIDIA. You remember a year and a half ago when I made a video, I'm out of NVIDIA, it's overvalued. I should have held it. I would have done another 8x on NVIDIA. So the tin can strategy, you buy a stock and you forget about it. Sometimes it could be a good strategy. You always learn. But my journey has made it so that I've learned about Bitcoin, and Bitcoin is, along with Tesla, my two biggest buckets. And you can see it's not quite 2/3, but almost. It's about 60% of a portfolio. I roughly describe it as roughly a third, and a third is roughly what it is. Tesla and Bitcoin. I've covered Tesla a few times on the channel. There's just so much competition. Everybody covers Tesla in great detail. So I feel like I don't really need to cover it as much. I want to differentiate the channel. But Tesla, if you're curious, Tesla, most of my position in Tesla is straight stock, but it's also leaps. I have leaps in 26, January 26, June 26, December 26. My leaps tend to be close to the $200 range, right? I have some at 210. I have some at 190. Some at 175. I have a few at 250. So that's where my leaps are. Anyways, that's the leaps. So that's the conviction. Straight stock is the biggest conviction, and TSLL. So on the dips, I think it may be wise to buy TSLL, which is a 2x Tesla. Again, I don't think it's wise for anybody to do anything. This is just what I do. This is no advice. This is just what I do. I love Tesla. I sleep very well at night with Tesla, and this crisis, Fed-induced crisis that we've been going through, every time I see a competitor quit, a competitor exit the industry, exit the competition, every time I get more bullish on Tesla. It is the epitome of a PayPal mafia stock. Elon Musk was part of the PayPal mafia. And, when Palantir is still a position that I have, it's a nice position now in absolute value. Palantir for me, which you'll see in the final bucket, it's one of the many stocks that I don't follow anymore because I just own it and I just, Palantir was founded by Peter Thiel, right? PayPal Mafia. I think it's wise for folks to pay attention to this new way of doing business in the 21st century. I'm not surprised to see the performance of a stock like Palantir and to see the performance of a stock like Tesla and to see where they hailed from and where they learned their way of doing business. So inspiring stuff in my view. Tesla and Bitcoin. Bitcoin is also my biggest position. They're both my biggest positions, right? Bitcoin, again, there's people who were in this space smaller, but for the longest time, Bitcoin was just through wallets, and so it's cold wallets, mostly cold storage, and maybe when I'm 60, I'll upload it somewhere and borrow against it. That's the goal. That's what most Bitcoiners will tell you. Bitcoin is a way to beat the denominator, beat the monetary expansion. Bitcoin is fixed, 21 million. That's it. That's all there will ever be. And the dollar, you don't know. You don't know how much there will ever be. But if I had to make a bet, there's going to be many, many, many more dollars that are going to have to be printed in the future for the entitlement. So anyways, that's just the way it is. My exposure, pure play Bitcoin is number one exposure. Then MicroStrategy. MicroStrategy has been a big position for me, actually. CleanSpark. I may have gone a little heavy on CleanSpark, around the $9. I remember buying at $8.30 or something, so we'll see where that goes. It may be a mistake. Don't follow me. No investment advice, but CleanSpark is becoming a little heavy here. I have some old Coinbase. This is an historic position. I'll probably keep it forever. Coinbase is the on-ramp. I'm fine with Coinbase. I like the company. Some people say, oh, I should never buy Coinbase. Some people say, oh, Binance will beat Coinbase. Oh, Uniswap will beat Coinbase. Nah, I just like Coinbase. They hold the Bitcoin for all of the ETFs. And I have tiny positions that are not really worth mentioning, which is Bitfarms and Riot. I like this too. Wait for my video on Iron. I'm going to make a video on Iron. I know many of you, every time I talk about Bitcoin, they ask me about Iron. I'll make one. Okay, now let's talk about the third bucket. So that would be the second biggest bucket, knowing that the first biggest and the first biggest are about the same size. So so ex aequo, first is Tesla and Bitcoin, and then followed by QQQ. And let me tell you one thing about QQQ, which is why when I talk about my stocks, I often don't refer to QQQ because it's in retirement accounts, and I don't have a choice. I mean, that's not true. They make you believe you have a choice. When you have a retirement account, they send you a list, 3 pages of funds that you can choose from. And what you find, it's mostly funds with very, very, very fat fees. And you typically have a Nasdaq fund or a Vanguard Growth Fund, mutual fund, or you have a S&P 500 fund. And of course, I'm definitely not buying the S&P 500. Right? Do you see me buying insurance companies? Do you see me buying Ford? Do you see me buying Wells Fargo? Airlines? No. Intel? No. S&P 500? Absolutely not. Moving away entirely from that, the QQQ to me is the way to go if you're going to have to buy index funds. I really believe in the QQQ. And of course, the QQQ, by now you probably know my style. It's too conservative for me. Over a long term, it's done about 16-17% year over year. That's too conservative for me. So when I venture out on ETFs on accounts where I have control, i.e., accounts that I manage, i.e., not retirement accounts, I'm gonna choose either between TQQQ, which is the triple leverage QQQ. Yeah, you're not supposed to own leverage stocks for more than a month. The volatility is gonna create attrition, etc. All of that is true, but nonetheless, when you look at TQQQ, the triple QQQ over is it 12 or 13 years now, what you find is that the return is close to 2.1. So it's 2.1 times the QQQ return is what you get in the triple QQQ. So of course you lose a lot in the fees. Of course you lose a lot in the volatility. But you're still going to outperform the QQQ because the TQQQ also shorts the US dollar and by borrowing, right? And there is the question of the supposed wipeout, right? The whole question of what would happen if TQQQ lost 33% in a day. Well, I think in that risk of a complete wipeout, I think one is very, very, very well compensated for that risk in the fact that you do double, 2.1 times the QQQ. So that's what 33, 34% on the TQQQ. In my view, you're very well compensated for that risk. It's all about are you compensated for the risk, right? Tesla, if you look at Tesla, a lot of people say there is key man risk in Tesla. I happen to think leadership is not the most important thing in a business. I think the key man risk is way overstated, but most people who buy Tesla accept that there is a key man risk. What if Elon Musk lives? What if he goes away, right? What if he leaves the company? That's a key man risk. You're being compensated with the outperformance of a stock like Tesla. So QQQ, most of the time, there's nothing to comment from me on the QQQ, but just know in there. And oftentimes when I refer to my position size, I'll often refer to them without reference to the QQQ because some of these accounts I haven't logged into in years. So, I can't even imagine. They probably would want new password with 20 characters and 2FA and maybe a letter. So I'll see this when I'm retired. And when I'm over 59 and a half. So anyways, moving on to the remaining 15% of all of the other assets. And just so you know, I'm still in the process of selling my house. The reason why I was absent is because I was listing my house. My house is listed. It's on the market. We'll see. But I'm fully exiting real estate. As soon as it's sold, I'm gonna have zero real estate. I am fully exiting real estate, and I'll just rent, and that's what I'm gonna do and keep doing. And I could make a video about that on the channel. This is a reflection 10 years in the making. And real estate, I think, is just going to be taxed out of existence by local governments. It's kind of the way I view real estate today. And so I'll make dedicated video to that, but just know there's no real estate. Real estate is going to be gone, right? And once that last house is sold, it's going to go into my highest convictions, the Teslas, the Bitcoin, and likely those assets where I have full agency, where I have full fun, because I consider this fun, what I cover on the channel, which is what I allow myself to play with. I allow myself to play the little hedge fund because it's a passion, because it's a hobby, right? So the folly, I guess, that I've allowed myself is my fourth largest bucket to be HIMS and HIMS derivatives. That's my fourth largest bucket. So it's a big bucket. So it's in all of the brokerage accounts. It's mostly direct stocks, but I also indulge in some January 2026 slips. And I consider HIMS to be obviously a risky play compared to a Tesla or a Bitcoin or a Nasdaq or even an Enphase, which is now behind HIMS in the position. HIMS is a risky play. I mean, you see how sensitive the HIMS stock is to short reports. Over the long run, I think the stock will be fine, but whenever there's a short report, the stock is fickle. It's so volatile. I guess, I don't think it's a major risk because how many videos have I made on HIMS? Like 20, 30. Each of these videos is many hours of analysis. Like to me, the risk I don't see because I've answered all of these questions. But to the outside world, it's a much riskier stock, which is why you get this discount. And there's some risk to HIMS. Like the biggest risk I can think about HIMS is maybe the government, maybe the boards of doctors saying, okay, we are going to forbid digital prescriptions and you can't have a digital prescriptions. That would be a major risk for HIMS. I think you're being compensated for that. Okay, so HIMS, no need to cover it more, but big position for me. Then Enphase. So Enphase, talk about, that was the name of the channel. The name of this video was Rate Cut Ready. I'm rate cut ready. Talk about positions that are rate cut ready, right? What do you think is going to happen to Tesla, a product financed with debt? What's going to happen when the rates go down? It's going to go up, in my view. Bitcoin, let's not even mention it, right? When the rates go down, exactly. Nasdaq, what is the effect between the Nasdaq and the rates going down? Exactly. HIMS, we shouldn't see that much effect from rates going down. HIMS is a recession-proof stock. It shouldn't be impacted. It shouldn't make a difference. Enphase rates going down, that's going to make a major difference because most people placing solar panels on their roof finance it over a 12-year, 15, sometimes 20-year loan. And of course, solar panels are going to look like a very compelling product when interest rates go back to normal, to the 2 to 3% normal long-term interest rates that I think we're going to go back to really quick. I think by the end of 25, we'll be there really quickly. And that's what the market now seems to think. But then again, I didn't think we would keep the interest rates so high for so long. I feel really bad about the wave of unemployment that is coming. I feel really bad about the people who can't sell their houses right now, and I may be one of those people. We'll see. I was able to sell a house no problem in January of 2024, but we'll see. Now we're in a more market recession, so we'll see. It's okay. It's just the way it is. But and Enphase, I don't have leaps on Enphase. It's direct stock only. To me, this is a long-term play. I'm perfectly fine to put it in a tin can, as they say, and not look at it for 10 years and then see where it's at in 10 years. Enphase is the best solar play, in my view, in the entire solar industry, and I've made a lot of videos about that, entire videos. HIMS is the best play, in my view, in the direct-to-consumer health sector. It's the biggest play. It's the one with the biggest scale, and I've made a lot of videos about that. Bitcoin is the best quote-unquote cryptocurrency, in my view, and that's why I believe in it. Tesla is the best electric car company, in my view, and that's why I believe in it. And objectively, the Nasdaq is the best index, in my view. What makes the Nasdaq so great, for example, is that it doesn't have a committee like the S&P 500. Who say kept out a company like Tesla because it didn't have as many models as the other auto sector industries, for example. The S&P 500, I believe much of the underperformance of the S&P 500 is due to the fact that they have a committee of people that are not really connected to disruption and innovation. So notice how in each of these, it's the best. I really believe in buying the best stock in one industry. That's what I fundamentally believe it. You don't want to go for number two. So this is why, and then we're getting to each of these are 1 to 2% position relative to the total, so it's not meaningless. Very important position from a nominal amount, right? But not from a relative amount. of course. And you notice if you go into all of this, I try to buy the best in each field, right? So what's the best bank in Latin America, right? That's Nubank, right? SoFi, we'll see what's going to happen with SoFi. I know the internet is very happy all the time with SoFi. There's things that I haven't been happy with SoFi, and I've voiced my concerns about that on the channel, including them exiting crypto. I thought it was a major mistake. They should have sued the regulator, like other companies did, like Kraken, for example. They didn't do that. Anyways, forcing your customers in 9 states, including my state, to sell their crypto, forcing them to sell their crypto at the bottom, it leaves a sour taste in my mind. I closed everything with SoFi. I used to have a brokerage account with them. I closed it. I closed everything. It left a sour taste in my mind. So I still own the stock. We'll see what happens. But one could make a case that it's the best neobank. One could make a case that SoFi and Square and the Cash App are an equally compelling neobank for a lot of people. And Square, Cash App never forced anybody to sell their Bitcoin. So, anyways, maybe I have my own bias, right? I'm showing my own bias, but always keep in mind, right? 30%, 1 to 2% each of these. 30%. So you know where my bias is. I'm transparent, right? Google and Amazon, right? The best at organizing information, the best at selling stuff, right? Mercado Libre, the best at selling stuff in Latin America. CrowdStrike, right? I don't play with Sentinel-1. Sentinel-1 is number 2. I don't want number 2. I want number 1. Stonier, the best payments company in Brazil. I don't play with PagSeguro, even though PagSeguro is cheaper. No, I want to have the best. Hood, I think Hood is the best brokerage, to be honest. I use Hood, and I use many other brokerages, and I can tell you that Hood is the best. That's for sure. Shift 4, we'll see where that one goes. I find the valuation very compelling for that one. Celsius, we'll see also where that one goes. It would be very controversial to say it's the best energy drink, but sure enough, when I go to the convenience stores here in Texas, when I go to Buc-ee's, sure enough, the one product that is sold out is Celsius, right? Datadog, I believe it's one of the best plays in its own segment of infrastructure visibility and scanning. Palantir, I think it's the best in its own segment. I think it's the best defense stock. Zscaler, right? The inventor of zero trust security. Everybody claims to do what Zscaler does, including Cloudflare, but when you look at the number, it seems to be the only one. Oddity, I think Oddity has a very compelling play in the world of makeup, even though I don't know much about makeup, but I know a good company when I see it, and this one has good numbers. InMode, we'll see if I'm right or wrong. This one is a cash cow. StoneCo is a cash cow. I got lucky on. A lot of people, not just me, I think a lot of people got lucky on. It's important to admit when you get lucky. Like this one, I got lucky on. Anyways, I'm not selling it now. We'll see. In 2035, if On running shoes is the new Nike, then nice. It will be a nice position. If On goes bankrupt, I don't really care. It's my tin can strategy. Remember, I still own Open Door stock. I'm probably going to sell that one, though, and not keep it forever. But I still own Open Door stock. It could have been a big company. It didn't work out. That's okay. That's just the nature of how investing works. And then I have some tracker stocks. So what do I call those tracker stocks? Is I just buy a few shares just so that they're on my radar. That's it. And I'm not the only one doing that. I think a lot of people do it like that. Ben Graham kind of speaks about that too. And my tracker stocks are things like Rocket Lab, ArcG, Solana. I wish I had the time to study crypto, but it's I need to. This is an asset I need to study more. Genetics is a disruption I need to study more. Rocket Lab. I actually don't own the stock. I own a leap of Rocket Lab, and I need to cover it on the channel. So these were mostly there to be on my radar. So hopefully that gives you some insight into my portfolio and into how I view things. I'm heavy on my lowest uncertainty, highest conviction plays. And that's what has served me well. And I think this is a stock ready portfolio. A rate cut ready portfolio, and I look forward to those rate cuts. Can't wait for a few days from now. Anyways, this was not investment advice, no financial advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful day.